Welcome back. You're still tuned into Trading Hour. Let's get the conversation going with Laxmi Organics. Rajan, Venkatesh, the Managing Director and the CEO of the company, is joining us on the show now. Rajan, good morning. Thank you so much for joining in. Will you end it first half on a strong note? It's been better than what we saw in the last couple of financial years because of the weakness we have been seeing in the chemical markets as well. Can you do better than what you did in the first half? 8% is the revenue growth. You've done margins of around 10%. What is second half looking like? What will you end the year with in terms of revenue growth and margins?
So thank you first and foremost for having Laxmi Organic and myself on the show. I think what we've given as a guidance is for FY25, we will strive to deliver profitable volume growth. You've seen that performance exhibit in the first half. Quarter one, we had our scheduled turnaround in the essentials part of our portfolio. That's where you saw the volumes being lower. But you saw in quarter two that we have rebounded strongly. Quarter three, we had a scheduled turnaround for our specialty units, and thereafter also everything has happened smoothly, and we are back on track. So focus remains for FY25 to deliver profitable volume growth.
Would you like to put a number to that?
No, at this point of time, I would like to be a bit coy about it. I hope you can understand.
Okay, and what about margins?
Margins, I think on our specialty portfolio, the way we have been always steering is we're focusing on EBITDA. For our specialty portfolio, that has to be in the range of 20 to 25%. We closed out last financial around 24% in our specialty basket. This first half and also quarter two, we were in a similar ballpark. So that's the robustness we want to keep going also into the remainder of this year. On the essentials, you've heard this from various quarters. This is more the commodity part of our portfolio, and the sort of spreads have been on the bottom quartile, and we are navigating through, I would say, smartly at this point in time, but we have to acknowledge the fact that margins and spreads are in the bottom quartile for the essentials part of the portfolio.
Okay. You know, the other segment that is high margin business is the fluoro-intermediates. The plant is expected to come on stream in the second half. You've been very bullish on this segment in general. By when do you expect the commercialization to happen? What will the initial capacity utilization be? And at peak, what kind of revenues will this particular segment see?
So we've called that out in the past. So peak revenues from that asset base that we have bought into India is 200 crores. We have said that in this financial year, so quarter four, we will achieve about 10 to 15% of that peak revenues. In the next financial, that is in FY26, we strive to achieve about 40 to 50% of the peak revenues. And in FY27 is where we will strive to achieve those peak revenues.
And once you achieve those revenues, and this is also a high margin business, right? 25%, 20 to 25%, that's the bracket. What does it do to your margin profile then? Because right now you are in high single digits or maybe around that 10% mark.
Right. So I think again, we are looking at it from an EBITDA lens. So the fluoro part of our portfolio is also nestled under our specialty vertical. And the focus remains to deliver EBITDA in the range of 20 to 25%. And I think this is also something that will deliver the same level of EBITDA. That remains our key focus. Because again, in specialty, very different to our essentials basket, it is always about what product can you produce in the multi-purpose asset that gives you the best bang for the buck. So that remains our focus.
So you're basically targeting essential EBITDA to increase by 3x and specialties EBITDA to increase by 2x by FY28. Right. What would be the drivers for it, and even for your capex? Because businesses do go through cycles. So what are the projections that you've made on current pricing?
Right. So let's first tackle business by business. So in the essentials basket, we closed out EBITDA for the essentials basket in FY24. We closed out about 4%, certainly below the 8 to 12% guidance we have given. But we have always said essentials is a business to be looked at over the cycle. And we remain confident to achieve that. And the reasons, one of the few triggers we have taken is also two levers. One is broader. That means we are introducing newer products. We announced the capex for a world-scale butyl acetate asset to be coming up in Dahej in the course of the next financial year. So those are having better margin profiles as compared to ethyl acetate. And also we have launched a new product of N-propyl acetate, which is going to the similar basket of customers and also having a slightly better margin profile as compared to ethyl acetate. So we will be de-risking at both an enterprise level and essentials basket our overexposure to ethyl acetate. So just to keep it in perspective, in FY24, ethyl acetate accounted for about 60% at an enterprise level when we talk about revenues. By FY28, this is anticipated to be in around the 40% range. So those are the efforts we are taking on essentials. We are continuously focusing on our operational excellence journey. That is where you're seeing the volume year-on-year and quarter-on-quarter improvement into our performance. Specialties, as I called it out, again, with the doubling of our capability at the H for our diketene derivatives, that is what gives us the confidence. We will be top 3 globally, including players in China, and we have a good, diverse portfolio of products and customers, which keep us in good state.
So, Rajan, these projections that you've made, where you will see doubling of revenues, the EBITDA growing as well, what if the cycle turns for the worse? What happens then? What are these projections made on? What pricing? Is it the current pricing, or you're already conservative in these projections?
So for where it has a large bearing is on the essentials part, and there we have been conservative. So we have certainly taken out the COVID peaks, and we have been actually looking at the quarter where we are at the bottom quartile or slightly in that ballpark. So we are very conservative, and the downside from this on spreads, I think the probability is lower as compared to the upside.
Okay. And last question before we let you go. How much is your dependence on China right now? What's the raw material availability looking like? Is it largely for your essential portfolio only? If you can give us some sense.
So from a raw material purchasing, we are depending about 30 to 40% of our raw material buy comes in from China. And I think we see no qualms in acquiring those raw materials. We are well hedged between multinational companies which are operating outside China and China. And I think at this point of time, we have long-term contracts in place. So that allows me to sleep well.
Okay, all right. Rajan, it was a pleasure speaking with you. Thank you so much for joining in today. Mostly chemical companies have not been sleeping well because what's been happening in China and globally. But let's see, better days ahead for the industry maybe. Thank you for your thoughts today.
Thank you for having Laxmi on your show.
Okay, all right. With that, we'll take your leave on this edition of Trading Hour. But stay tuned. A lot of action lined up on Halftime Report up next.